What's up, everybody? My name is Ale. Welcome to my world of finance, and welcome to Sunday Stock Battle, where basically a new series where I pit two stocks against each other. And so today we're going to be looking. Today will be episode 1, and we're going to be looking at Coca Cola versus Pepsi or PepsiCo. And if you guys like this series, if you want to see this every single Sunday, then make sure that you let me know by supporting the video. Make sure that you hit the like button. That's the best way to let me know that you guys want more videos like this every single Sunday. All right, so today we're going to be pitting Coca Cola versus Pepsi. Coca Cola's ticker symbol is KO, and Pepsi or PepsiCo's ticker symbol is PEP or PEP. Now, the way that we're going to do this is we're going to look at both companies' stock, their performance, their income statement, their balance sheet, their dividends, and then I'm going to give a conclusion at the end, and I'm going to say basically which stock I like the most. And all throughout, we're going to be comparing both stocks, and I will be awarding points depending on what specific thing we're looking at. Also, don't forget to leave a comment for Ale's World Consensus. Let me know which one of these two stocks you like the most. So let me know if you like Coca-Cola or Pepsi more, and just leave a comment down below. I'll tally up the results, and I'll have those results for you guys in next week's video. So next Sunday, I'll have the results in that video. All right, now unless you've been living under a rock or on a deserted island, then I'm sure that you've heard of both of these companies. Both of them are very famous for their soda especially, but they have other brands as well. So when looking at Coca-Cola, they own other brands like Fanta, Dasani, Fairlife. Fairlife is like that, a milk product. If you've ever gone to the grocery store and you see that Fairlife, it's usually like a more premium milk that you can get. They also own Sprite. They own Minute Maid, Powerade, Vitamin Water, and Gold Peak. By the way, Gold Peak is like that tea. It's like a premium tea that you can get at the store. And I actually have a lot of friends that drink that. So I was actually a little surprised to find out that Coca-Cola owns that one. All right, now when looking at PepsiCo, they're mostly famous obviously for Pepsi Cola, but they also have Gatorade, Mountain Dew, Aquafina. By the way, Aquafina is my favorite water. I don't really buy water that much, but whenever I do, I get Aquafina. Well, that's not true. I do buy water, but that's the whole story. I fill up glass jugs. I'm kind of a conspiracy theorist. I don't like plastic and stuff, so I use like glass jugs, and I just fill up those water. But whenever I do buy water, I buy Aquafina. I think it tastes very good. They also own Tropicana, Naked Juice. Naked Juice is very popular. That's actually becoming a billion-dollar company brand all on its own. So Naked Juice is a big one. I was surprised to find out that they own that one. They also have Rockstar, and also non-beverage brands like Quaker and Frito-Lay. And when looking at their Frito-Lay segment, that consists of Lay's, Doritos, Cheetos, Tostitos, Fritos, and Ruffles. So I was pretty surprised to find out that they own all of those as well. Now, that's really just a small summary of the different brands that they own. If we counted up all the different brands, it would probably be in the hundreds. I mean, these two companies own like an enormous amount of brands, and global brands as well, brands that I've never even heard of. So I would say that they're both pretty well diverse, but when looking at which one is a little more diverse, I feel like I've seen PepsiCo owning more famous non-beverage brands than Coca-Cola. So for that reason, from what I've seen, mostly Coca-Cola is mostly a beverage company, and I haven't seen a whole lot of famous brands that are non-beverage. So for that reason, I'll give this point to Pepsi. So PepsiCo is going to start with 1 point. All right, now we're going to transition to these two companies' stocks. Now, one of the things that you'll notice is that both of these companies are giant companies, and so their stocks are pretty stable in the long run. They're not really considered volatile stocks, and so they're generally considered very long-term investments that you mostly invest in to accumulate dividends. And so these are really dividend stocks. Dividends are very important with these stocks, and so we're going to look at that a little bit later in the video. But the reason why dividends are so important is because these type of stocks don't usually provide very high returns. Okay, on this channel, we're usually used to looking at growth stocks, and the reason why I love growth stocks so much is because they tend to definitely be more volatile, but they can also offer higher returns. And so speculative stocks, growth stocks, they can always offer more return, but they're also more risky. So I would say that these two stocks are a little less on the risky side, and they're more, I would consider them more to be dividend stocks as well. All right, now Coca-Cola is currently trading at around $46 per share, and they're barely positive year to date. In the last 5 years, they have only gone up less than 15%. Okay, so like I said, these aren't gonna get you huge returns most of the time, unless you were to jump in on these stocks early. Otherwise, if you jump in on these stocks kind of late, I wouldn't really expect these to provide a whole lot of returns on your investment, except for the fact of dividends. Now, they're also pretty close to reaching a $200 billion market cap, and rounding off their PE ratios with data from Nasdaq.com, they had a PE ratio of around 24 last year, and it's estimated to drop to around 22 this year, 21 next year, and 19 by 2020. Now, PEP, on the other hand, or PepsiCo, is trading for around $112. So just kind of in the general sense, if you were to invest in these, a little bit of a higher share price there. But that's just in the general sense. I never pay attention to that. They're actually down year to date by around 6%. So they are actually down year to date. But in the last 5 years, they are up more than double that of Coke at over 30%. So much better returns in the last 5 years. And they also have a smaller market cap than KO at around 160 billion. Now, when looking at their PE ratio, Nasdaq.com for some reason wouldn't give me future PE ratios. They would mostly just give me historical data. So when looking at Pepsi's PE ratios, in 2015, it was at around 22. In 2016, it was at around 21. Last year, it was 20. And then this year, it is estimated to drop to around 18. So while both companies technically have shrinking PE ratios, Pepsi really gets the edge here because this year it's estimated to be at around 18, according to Nasdaq.com. And then Coca Cola is at around 22. So Coca Cola is a bit higher there. Also, when looking at their stock performance in the last 5 years, Pepsi had better returns. So for those couple of reasons, I'll give this round also to PepsiCo. So Pepsi is leading the charge here. 2 points. Coca-Cola has 0. Okay, now let's take a look at their income statements for the past 4 years, and I got these numbers from Nasdaq.com as well. Now, starting with Coca-Cola's income statement, their revenue declined every single year, right along with their gross profit, and their net income was devastatingly low last year. In 2016, it dropped by almost $1 billion, and then in 2017, it dropped by over $5 billion. That's insane. And to be honest, I don't really know what to say about this. After doing some research, it looks like Coca-Cola was refranchising some of their bottling operations from the corporate level down to the local level. So they were actually working with like some local businesses and stuff. And there was a lot of taxes and fees and all kinds of things associated with it. Now, I don't think that all of these fees are going to be incurred by Coca-Cola in the future. But still, I mean, dropping by over $5 billion in 1 year, that just seems insane to me. PepsiCo, on the other hand, looks much more stable to me. Now, they're not anything spectacular, but they still look a lot more stable. When looking at revenue and gross profit for the last few years, it's been pretty flat, but at least last year it actually went up. Net income has somewhat been dropping, but it went down over $1 billion in 2017, but that's still far lower than the $5 billion drop of Coke. So because of higher revenue, more profit, and more stable net income, I have to give the edge to PepsiCo once again. So the third point will go to Pepsi. Coca-Cola is still at 0. Okay, now it's time to look at these companies' balance sheets. So when looking at Coca-Cola, they had around $6 billion in cash last year. Pepsi had around $10 billion. So Pepsi had quite a significant amount more of cash. And Pepsi also has a better looking positive trend for the last 4 years. Now, when looking at some of the ratios, when looking at their current ratio, Coca-Cola is at around 1.3, Pepsi is at 1.5. Coke's assets to liability ratio is at about 1.2. Pepsi's at around 1.1. So you can see that the ratios are pretty similar. A lot of the numbers are actually very similar. Pepsi technically does have a little more cash, but if we looked at investments and things like that, we would find that both companies are actually very similar. So I'm going to give this round a tie. No point given to either stock. All right, now it's time to move on to my favorite part. We're going to talk about dividends. By the way, I consider myself a little bit of a dividend growth investor. I started building up a dividend growth portfolio from scratch this year. You can find that video right up here in the description below or at the end of this video. But as somewhat of a dividend investor, I don't actually care that much about dividend yields. I know a lot of people care about dividend yields. I don't really care about that too much. What I actually care about, and especially with these giant companies that are really long-term plays, you know, because dividend yields can actually fluctuate with stock price. So what I really care about is dividend history. Okay, has the company been paying out dividends on a consistent basis? Do they have a long track record of paying dividends and also increasing their dividends? And I also care about their payout ratio. The payout ratio is how much of their profit are they paying out in dividends. So are their dividends sustainable? Are they paying out too much of their profits to the point where they won't be able to sustain them in the future? That's what I really care about. Okay, now both companies really have very similar yields and payout ratios. The former being at around 3.3% when looking at the yield, and then the payout ratio being at around 72%. So that's a little high, but not too high. It's kind of reasonable. I would like it to be a little bit lower. I generally like payout ratios at around 50%. But when looking at the payout ratio 5-year average, PepsiCo is actually much lower at around 66%, and then Coca Cola is almost double that at around 120%. Now, there's really a couple different ways that you could look at that. One would be that, Coca Cola maybe pushes the boundaries a little bit more. Maybe their dividends are a little more risky, but you could also say that Coca Cola is pushing those boundaries because they really want to pay out their dividends. So there's just really a couple different ways that you could look at it. I think personally, I like the fact that PepsiCo's seems much lower as an average. That just tells me that it's a bit more stable, that they have enough cash flow coming in to afford their dividends. They don't really have to push the boundaries too much. So maybe to me, that means that it's a little riskier, but I could definitely see an argument for the complete opposite, so I won't really go too much into that. All right, now both companies are considered dividend aristocrats, and what that means is that they have been increasing their dividend payments for the last 25 years. So that is a very long, stable track record of increasing their dividend payments, which is fantastic, a really good thing to see. But when looking at the last 5 years or so, we're going to take a look at Coca-Cola's last 5 increases. So we'll look at their dividend increases as a percentage, and we're going to round them off. Okay, so Coca-Cola's last 5 increases have been 9%, 8%, 6%, 6%, and 5%. While Pepsi, when looking at Pepsi, their last 5 increases have been 6%, 15%, 7%, 7%, and 15%. So this one is pretty close, but because of the payout ratio 5-year average being lower for Pepsi, and because they've been increasing their dividends by a little bit more than Coca-Cola, I'm going to give this point to Pepsi. So now we're at Pepsi has 4 points. Coca-Cola is still currently at 0. Okay, so now we're going to take a look at what their futures might look like, given the increased global awareness of the negative effects of sugar and junk food and things like that. Now, Coca-Cola has mostly been meeting this criticism by offering smaller packaging sizes. So you may have noticed, smaller cans of soda, things like that. And also, they're trying to put out healthier alternatives to some of their products as well. Okay, so besides shrinking some of their packaging sizes, they've also been reducing sugar in many of their products, and they've been trying to offer more alternative products with more hydration and nutritional benefits as well. Now, the result has been sugar cuts to over 500 of their drinks in 2017 alone, and about 40% of their total sparkling brands being available in smaller packages. So that's a pretty significant step there. But the real problem that I see with Coca-Cola is that they've mostly been replacing sugar with artificial sweeteners, and a lot of people argue that artificial sweeteners are just as bad as sugar. So this may be a losing battle, and that's definitely a huge concern that I have with a company like Coca-Cola. And really, when looking at healthier options, the biggest ones that I've seen available are things like Dasani. This is from Coca-Cola. Things like Dasani, which is just water, vitamin water, which still has a ton of sugar, and even if you replace it with artificial sweeteners, it's still pretty bad. But they do have some pretty strong tea brands. They have Simply Juice, Minute Maid, but even when switching to things like juice, trying to push things like healthy juice and stuff like that, a lot of those things also still have a lot of sugar in them as well. So like I said, I just kind of feel like it might be a losing battle. Now, when looking at PepsiCo, most analysts feel that they've been making a little bit of a bigger push to the health conscious market. Now, they've made a lot of investments with things like Life Water, Tropicana, actually Tropicana Probiotics, which is kind of crazy because, probiotics is kind of like a buzzword right now. Like, a lot of people are really into probiotics. So that could potentially be a smart move, but we'll have to see. And then Naked Juice. And Naked Juice is quickly becoming a billion-dollar brand on its own. So Naked Juice is definitely a big one that I see here for PepsiCo that I think could definitely be a really good brand for them. And I think that all of these moves are really a big deal because when looking at carbonated drinks, we talked a lot about like things like teas and juices and things like that. When looking at carbonated drinks, those sales have been declining for over 10 straight years. So that's not a good sign. And a lot of these companies, Coca-Cola and PepsiCo, they rely heavily on carbonated drinks. So transitioning to things like juices and teas and things like that could actually be a very important move for them. Now, when trying to basically determine a winner in this little subcategory, I can't really say there's a clear winner because both of them are making pushes for teas and juices and things like that. Both of them are reducing sugar, offering smaller package sizing. But even when they reduce sugar, they tend to replace it with artificial sweeteners. So honestly, I feel like it's a losing battle for both companies, but I could be completely wrong. A lot of people say that obesity is nothing new, and heart disease is nothing new, and diabetes is nothing new. We've known about it for a long time, and we still consume all of this junk food. So a lot of analysts and investors say, you know, it's no big deal. Me personally, I mentioned before, I'm a little more health conscious, and from what I see around me and the area that I live in, I feel like people are actually focusing a lot more on what they consume, and they're trying to find healthier alternatives and things like that. So I would be a little concerned about this, but I can't give either company a point here because I just don't see a clear winner. All right, so in conclusion, PepsiCo is the clear winner at 4 points, Coca Cola at 0. I'm sorry if any of you are invested in Coca Cola. I don't mean to offend anyone. This is just based off of the small things that we looked at today. I'm sure that if we did a lot more research, maybe the outcome would be different. And, you know, I honestly have concerns for both companies, but it just seems like PepsiCo has their stuff together a bit more, and they seem a little more stable, and maybe even at a cheaper price too when looking at like their PE ratio and things like that. So the win has to go to PepsiCo in this situation. But who cares what I think, guys? It really matters what you guys think. So make sure that you leave a comment down below. Let me know which one of these two stocks you like the most, PepsiCo or Coca-Cola, and I'll tally up the results, and I'll have that for you guys in next week's video. Also, if you want this series to continue for next Sunday, make sure that you let me know by hitting the like button. And if you have any suggestions of two stocks that you'd like to see go up against each other, let me know. The only thing that I ask is that you please make them somewhat trendy companies that people would want to watch. You know, don't try not to make it like companies that nobody has ever heard of, because then the video probably won't get any views or anything like that. But anyway, that's a whole nother thing. Thank you so much for watching, guys. I really appreciate it. You guys are awesome. Have a wonderful, beautiful day. God bless, and I'll see you later. Bye-bye.